Let me read out some of the rationale for the policy today. We cut the repo rate by 25 basis points and the associated rates by the appropriate amount. Banks have started passing through some of the past rate cuts into their lending rates. Headline inflation has evolved along the projected path. The impact of unseasonal rains has been moderate so far. Administered price increases remain muted, and the timing of normalization of U.S. monetary policy seems to have been pushed back. With low domestic capacity utilization, still mixed indicators of recovery, and subdued investment and credit growth, there is therefore a case for a cut in the policy rate today. However, of the risks to inflation identified in April, 3 still cloud the picture. First, some forecasters, notably the IMD, predict a below normal southwest monsoon. Astute food management is needed to mitigate possible inflationary effects. Second, crude prices have been firming amidst considerable volatility, and geopolitical risks are ever present. Third, volatility in the external environment could impact inflation. Therefore, a conservative strategy would be to wait, especially for more certainty on both the monsoon outturn as well as the effects of government responses if the monsoon turns out to be weak. With still weak investment and the need to reduce supply constraints over the medium term to stay on the proposed disinflationary path, which is down to 4% in early 2018, we feel a more appropriate stance is to front-load a rate cut today and then wait for data that clarify uncertainty. Meanwhile, banks should pass through the sequence of rate cuts into lending rates. So I think the policy today I would characterize as neither conservative nor aggressive. It's in some sense a Goldilocks policy, just right given the current situation. In addition, I hope to be able to announce a new set of bank licenses, at least one set of bank licenses by August end. We are undertaking a review of all regulations governing markets to see where there is scope for further liberalization once macroeconomic uncertainty diminishes. We're also doing a deep scrutiny of all our past regulations in general to prepare a greatly simplified list of master circulars. Thank you. Happy to take questions.
Who do we begin with? Saloni?
Thank you so much. Saloni from Bloomberg TV. Sir, in your last 3 policies, we had the word accommodative policy stance. It's not mentioned here. Looking at the inflation target that has been revised upwards, do you see that further room for monetary policy easing is very low, considering that from September we will see some base effect also on inflation? And another part, to this question, government, on the other hand, has been putting a lot of responsibility on RBI to prop up growth. Do you think that it's time that some bit of burden is shared with the government to prop up growth?
Well, start with your second question. I don't think the premise is right that the government has been putting the burden on the RBI. The government has been acting on its own to try and reduce bottlenecks, create new pathways for growth. So I wouldn't agree with that part. I think we both play together. And as far as the rate cut today goes, it is an attempt to ease the way for further investment to reduce medium-term supply constraints. As far as the first part of the question goes, we have done what we think is appropriate given the data. We have always said we are data contingent. There are possibilities if the monsoon turns out much better than forecast by various forecasting agencies, where there might be more room that emerges, or if the actions by the government are such as to contain the possible inflationary effects. So we've used the room that the data gives us, and our policy will continue to be data contingent. Urjit, would you like to add something there?
No, if I could just say that, although the forecast for early January has been increased to about 6%, it's still a marginal increase, but we have emphasized the risks on both sides.
Lata?
You have said that a more appropriate stance, please. Quickly. Sorry, Lata Venkateshwar,
You've said that a more appropriate stance is to front-load the rate cut and then wait for data that clarify uncertainty. What is the data you're waiting for? What kind of uncertainty and what action? Also, you have so far maintained that you want a 1.5% to 2% corridor of real interest rates. If the inflation forecast is 6%, then you have already reduced the corridor to 1.25%. Are you willing to reduce it further?
Let's start first with the question of what data we're waiting for. Clearly, the biggest uncertainty at this point is the outturn of the monsoon, but also the policy reaction. As you know, there have been El Ninos in the past with reasonable rainfall, poor rainfall, which has not led to a fall in production, and a fall in production which has not led to inflation. So each path of this sequence is fraught with uncertainty. So we need to figure out how this plays out. And clearly government action is very important, because I think the link between all these has been broken by appropriate government action. So for example, 2002-2003, there was very weak rain. But you had very limited inflation, partly because of government action. So I think we need to wait and see how all those factors play out. That would be the biggest factor that is on our mind right now. Of course, the pickup in the economy. We think the economy is in recovery, still slow recovery, as evidenced by corporate numbers. But it could pick up faster, or it could pick up slower. That will have an impact on how much room there is to play with. So these are factors that we will be looking for. Of course, there are the oil prices. We believe, as do most forecasters, that there is some upside checks on oil prices, which is shale production, which comes in at $70+ but does this prevent geopolitical shocks from affecting oil prices, and how does that play out over the medium term? OPEC is meeting this week. That will also affect how oil prices move. So there are a considerable number of uncertainties. As I said, we've done what we could given the room that current data allows. In fact, we've erred a little bit on focusing on encouraging investment, given the need to alleviate medium-term supply constraints. Now, going forward, if more room builds up, we will have more room to take action.
My point is, as you said, you've erred a little. You've gone down below that 1.5% Lakshman Rekha that you gave yourself. Will you be willing to err further?
No, I think the point we've always made is that we have to be on the disinflationary path that has been set out. So whatever room builds up on the disinflationary path, we will use. But we're not going to move far away from the disinflationary path. That wouldn't make sense, given that we've just building up credibility to stay on that path.